Hello, good morning, good afternoon, good evening, wherever you're watching this video. Welcome back to Accounting Simplified, where we guide business owners on how to make the right decision in their business and to make real profits. Today, we are dropping a very big banger, a hot video. We're breaking down one of the most important topics every smart business owner needs to understand. And the topic for today is cash flow. Now, if that sounds like what you would want to learn, chill and join us to the end of this video so that you learn every single thing you need to know about your cash flow. All right. Now, because profit is good, but without cash, your business can stop suddenly. So let me show you how to understand it, how to track your cash, and how to keep your business alive and growing. Meanwhile, grab yourself a cup of coffee or water while I take you on this journey. Now, what is cash flow? Cash flow simply means movement of cash, the flow of money in and out of your business. See it like a two-way traffic. Money that flows in is cash inflow. Money that flows out is cash outflow. So you join them together, you have what? Cash flow. Sometimes money comes in, it flows in, while sometimes money flows out. Now, activities that lead to money flowing into your business are things like what? Your sales. When you sell something, you receive money. Money has come into your business. When you receive a loan, you receive money. Money have come into your business. When someone pays you money through transfers, you received money. That is cash inflow, money coming in. Now, when you buy things like you want to restock, it's an outflow. When you pay for your transport fare, it's an outflow. Why? Money is leaving your pockets. Money is leaving the business. You pay your rent, money is leaving. You buy food, money is leaving. You pay salaries, money is leaving. Hope you're getting it now. Now, because you can show profit on paper by basically subtracting your expenses from your income, but you still have no money to run your business. True or false? True. But with your cash flow, it will tell you if you truly have money available right now to operate your business. And that is the main thing. Cash. Cash is king. So I'll give you a very simple example to understand this clearer. Because if your cash flow is good, it means your business is healthy. But if your cash flow is bad, it means that your business is struggling. Okay, so let's say, for instance, you received 500,000 naira from sale of one of your products. Are we together? And then you spent 350,000 naira on restocking the shop, paying your transport fare, and packaging those products. Now, what is your cash flow? You have a cash inflow of 500,000 naira from sales and an outflow of 350,000 naira. If you subtract it, you'll be left with what? 150,000 naira. That is 500,000 inflow minus the outflow of 350,000 naira. That will give you 150,000 naira as your cash flow. Now, this is a positive cash flow. Why? Because you have some cash with you. And that is because your expenses is less than the money that you received. So your business is doing very well. Your business is a healthy business. Now, if in a second scenario, you earn 500,000 naira from sales and then you spend 650,000 naira on stock, transport, paying bills. Now you now have bills to pay in addition to other things you had to pay earlier on. You paid for entertainment for your customers and you paid for your rent. and everything now summed up to 650,000 naira. No longer 350,000 naira as we had in the first instance. In this second instance, you now have rent to pay, you have feeding, entertainment to entertain your customers. Now that increased your expenses to 650,000 naira. Do you think you have any cash left with you? No. I sure bet you even borrowed money to be able to meet up these expenses, because you had 500,000 naira that you received from sales, but you're spending 650,000 naira. So you're owing 100,000 naira debt, maybe for rent. But the important thing is that your cash flow, the cash you have, is not able to meet up your expenses. And so you'll be having a negative cash flow of 100,000 naira. So that means you're owing, because your expenses in this case is more than your inflow. I'm sure you must have borrowed money. I'm giving this instance for you to understand cash outflow and cash inflow, negative cash and positive cash, when your business is healthy and when your business is what? Struggling. Hope you're getting it now. But just in case that explanation didn't make so much sense, let me give you another example. So let's leave the big money, come down to our level, smaller money. Alright. So let's say you made a sales of 20,000 naira for the day. That's your cash inflow. And you're feeling so happy. Wow, I feel good. I sold so well today. But then you decided to buy new stock 10,000 naira, buy fuel 3,000 naira. You bought data 1,005, and you bought food 2,000 naira. You spent 1,000 naira on your transport. And you decided to give yourself a treat. Maybe buy yourself a gift and spend 1,000 naira. If you add up all these expenses, that will give you 18,500 naira. So even though you made a sales of 20,000 naira, you have spent 18,500 naira. Now the question is, how much cash do you have with you? You have 1,500. This 1,500 is the real cash your business have now. So can you tell me what you have learned so far from this business? Or from this example? You can see that sometimes people make millions of naira a day, but they spend almost all the money. And then they are left with what? Very little left. And this is why most people say, I'm not seeing the money in my business. I'm not seeing the money. You're the one spending the money frivolously. And that is because you are allowing your outflow to swallow your income. See cash flow like a bucket of water. In fact, like a bucket. If you pour more water into the bucket, the water stays in. But if you have so many holes in the bucket will leak out. That is what your cash flow is like. So if we decide to make more expenses, you have very little amount of money left. Even though you're making sales, but yet you're not having any money left to restock, no money left to plan for the business. Why? Because you've spent your money. Now the good thing about cash flow is that it shows you where your money is going. If you're very, very, very honest with yourself, and like I always advocate, keep record of every single dime you spend, so that you can know what you're doing with your money. You would see exactly where your money has been gone. You would know exactly which expense is not necessary, or which expense can I reduce. It will help you track your business, track your money, and help you reduce wastage. And you will know, okay, how can I make this business be a healthier business? Cash flow is very good because it helps you see clearly what's happening in your business. It tells you why sometimes your account is always empty. And that is why I always advocate for record keeping. Even when you're selling, you might not be able to say, yes, I'm going home with something. Why? You have spent all the money. And that is why cash flow is important. Because you can see your business worth clearly. You would know where you need to slow down on your expenses, where you need to save, which expense you need to reduce. And this would help you what? Plan. So, in one sentence, cash flow tells you what has entered your business as cash, what has left, and what is remaining. This is Accounting Simplified. Hey, if you're enjoying this video and you feel you're getting value, kindly consider subscribing to this video so that you can be informed about tips you can use to grow your business. Now, cash flow is very important, like I said. It helps you to reduce unnecessary expenses, helps you to reduce credit to customers, helps you to track your expenses, helps you to negotiate better with suppliers because you want to make more money. You're seeing that, yes, with my expenses, because they are written down, I can know the ones that are necessary and the ones that are not necessary. With accurate record keeping, you can see, I made some sales, but I gave someone credit to some customers. That is why I'm not having actual cash with me. So I reduce the number of credits I give to my customers so that I can have actual cash. And if I have actual cash, I can now plan. I can now restock. I can now do other things with my money. Do you understand? Now, another thing you can do is that because you have seen how your money is being expended, you can also negotiate better with your supplier so that you can what? Improve your cash flow. You know that when you buy goods in bulk, you make a whole lot of savings. And so if you see that you spent maybe more than expected in buying goods from your customers, you can decide to negotiate better with them to get a better price so that you can what? Make more profits. The long and short of your business procedure and everything you're doing in business is to what? Increase your profits. And so therefore, to increase your profit, you must find ways to increase your sales and find ways to what? Reduce your expenses. These small changes can make in fact a very big difference in your business. Cash flow, see it like the heartbeat of your business. If you can control your cash flow, I assure you, your business will grow steadily and you would avoid financial stress. I can imagine what it's like to be in business and yet you don't even know if you're sure of being in that same business in the next month. Try this cash flow monitoring and I'm sure you avoid yourself all the stress you're going to go through. If you found this video helpful, don't forget to like, share, and subscribe. This is Accounting Simplified, where we help you know your numbers, grow your business with confidence. See you in my next video. Bye.